Good morning, an audio morning brief, and I'm just processing the weekly update right now. I'm Rich Potts for Critical Point. This is for the stock market. It's 9:05 a.m. Eastern Time, and it is Thursday, March 20th. The reason I did this update is, it's about 45 minutes for the weekly update. When you have time, you want to look in the latter part of it where I put up fundamental stuffs and charts and tables and discuss it. There's some indicators there that offer a little hope for the economy now and into next year. Some things happening. That's nice. But I also point out they're really not as important indicators as they once were. Okay. Then right behind that, I bring in indicators that this really looks bad to me. More of the sense of how people are spending money, what they think of the future, it doesn't look good, all right? And you may want to take a look at those relative to what I forecast from very short term to quite long term, okay? I run the whole gamut like I do every week there. But I think it's a good weekly update. All right, now let's get to this morning brief, kind of a snapshot thing or just near term. I think we've seen a level 3 top. I don't give you alerts on that, but I will give you one now. I think we got a level 3 top and the market's going lower the next week, maybe even the following week. I will warn you that there could be lingering upside this week into early next and then down. There is risk of being early, but I think it's over and done with, and I won't discuss the Federal Reserve, which I thought was a whole lot of nothing, but some people made a positive note out of it, okay? I'm just thinking we're setting up for some bad news again, mostly out of Washington, D.C., not necessarily business and economy, but I think it's coming into next week, but we may even get some economy news here as well. I think you want to watch the low price low of the 18th, or maybe the price low of this week, that if those cash indexes, Dow Jones, NASDAQ, S&P 500 swinging below it, I think we're on our way for that down move. I think we're on our way anyways. I've made the call, but that would be a little backup evidence if you want to wait and see if they actually knock it down, okay? Downside targets are all over the place, 54.70 all the way to 53.47 or something like that. And I will admit this market seems oversold enough that they really might not pound it all that much at all. That it is kind of trying to coast in or even maybe even base build here for that April run-up. But I'm just concerned it's at least down next week and maybe down into the first half of April before we get that April run-up. And I'm also concerned it might turn to the downside quite a bit, actually, and get really serious, even though there's technical chart stuff saying there really shouldn't be all that much downside. Nevertheless, the balance is I want to be bearish into next week, maybe following week. I may even have to be bearish a little longer. Yes, we can still get the April run-up, but I want to kind of be bearish all the way into May, June, July. The more I look at these economic indicators, I don't think it looks good. Any rate, for today, I think you've got a level 4 downswing that could bottom after 1 p.m. Eastern time today and be up tomorrow. But the model prefers it's actually lower into tomorrow than up tomorrow. That's your level 4 swing. And that up tomorrow really would just be a little bounce against what should be a level 3 downtrend into next week, maybe the following week. Past results not necessarily indicative of future results. Have a great day. Thank you.